Hello, everyone. Happy new week to you all. Happy Monday, everyone. And I trust we all had a wonderful weekend out there. I'm very excited to be with you here this morning as we are going to be taking another fresh new look at the financial market. But before we kickstart the session, let's quickly confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing hi. All right, so I can see a handful of comments here. I can see Nathaniel, good morning to you. Thank you very much. Totoline, thank you. Olepet, good morning to you too. Rice Rick, good morning. Hello, Carrie, good morning to you too. Glad to have you around with us this morning. So I'll take this as a positive confirmation that we are good to go this morning. And it's on this note, I welcome you once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you deep into the current market structures of the asset on our watch list for this week using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insights into the financial market, hereby using that information to unravel the potential trajectory of price action on the assets on our watch list for this week. Well, personally, I do have a handful of assets that I would like to share with you this morning as I have very interesting setups lining up for us for this week. However, considering today being the first trading day of the week, well, this is an opportunity for you to drop in the comment section any asset you want us to look at for this week. So it could be cryptocurrency, options, currency pairs, commodity, whatever, what have you. Let me know in the comment section if whatever you want us to treat for today, and trust me, I will try to incorporate it into our plans for this week. Well, personally, I have 4 to 5 major assets we're supposed to look at for today, which includes the US All Sports as usual, the USTech100, GBPUSD, XAUUSD, and of course the USD JPY. For those of you who are joining us for the first time, you are highly welcome on board. I'm very excited to have you around with us. I know you will be asking, what is this all about? Well, let me quickly give you a quick insight into what we do here. So as technical traders, we gather here every day to come together as a community and engage in follow-ups and reviews of our current positions if we have any, and strategically position ourselves ahead of the New York session. The session kickstarts at 10 a.m. UTC, 11 a.m. West African time, and I highly recommend that you stay tuned in during this time so that you don't miss out on the insights that we will be sharing during the course of the session. Our aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you. And of course, I encourage you to actively engage in the comment section. So with that being said here, let's dive right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And of course, we know how important this is as these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. So based on the assets we are looking at for this week, we are going to be focusing on the United States and the United Kingdom economic docket. And of course, we look at the higher time at the high impactful event. However, considering the absence of high impact event for today, Monday, November 6th, I went on to include the medium impact event so that we can have an idea into what will be driving the market sentiment for today. Now, the first impactful event for today is coming up in about 6 to 7 hours from now, and it's going to be a speech by Upil, who is a chief economist and executive director for monetary analysis and research of the Bank of England. He is also a member of the Monetary Policy Committee, and in fact, whatever he says today will be giving us an insight into the monetary policy of the Bank of England, and of course, an insight into the health of the economic situation in the United Kingdom. Then later on today, I think in about 8 to 9 hours from now, we look forward to a medium impact event from the United States economic docket, and this is the loan officer survey, and it's a vital data which provides critical insight into the lending practices of financial institutions in the United States. And by revealing trends in borrowing standards and loan demand, it offers a snapshot of economic activity within the United States. And of course, we are going to be looking at approximately 60 large domestic banks and 24 US branches and agencies of foreign banks for this data to come. So we look forward to this event too, as well as it will be giving us a clue into how this week is going to be like. So with the information we have gathered here, and as technical traders, we know that the anticipation of this event alone also has a tendency of influencing market sentiment, which of course will reflect on the chart as price action. So talking about price action, let's dive right into the business. And as usual, the first asset on our watch list for today is going to be the US All Spot. In fact, I already have a buy position running in this at this current point in time, and I would like to share with you what really led to my decision of buying this asset for today. And for those of you who took advantage of this move, well done. That means you're already catching up with our analytical approach. So well done to you for capitalizing on that move. But for those of you who missed out on it, don't worry. The week is still very early and there are still chances that we see new opportunities to take advantage of. So for us to have a quick holistic perspective into what is going on here, we shall be scaling up into the daily time frame. Now on the daily time frame, we have a very interesting and simple market structure, which we'll be using to guide our trading decision for this week. Now, the first thing I was able to observe on the US All Spot chart daily time frame is the $80 level, which had played a major role since the beginning of this year in determining the direction of price action. So as you will see the $80 mark area, you can see how consistent it has been since the beginning of this year. In fact, throughout the first half of this year, it was more of a selling niche, making it a very strong supply zone for participants in this market, as you will see here. In fact, this lasted into let's see, the month of April stroke the month of August. It was very, very prominent for selling pressure, and not until the last week of the month of August that we finally saw the breakout of that supply zone. And from a technical standpoint, when price action does break out of a very important structure like this, we expect at some point in time price may come back into structure to incite an uptrend continuation. Now, if you look at what has been going on here ever since price action broke out of the $80 level about a couple of months ago, you will see that price had remained above that structure as every attempt by the sellers to break through has been met with strong resistance from the buyers. Now look at what happened last week too as well. Price dropped into the $80 area, and price, as soon as it tested that level, you will begin to notice appearance of buy pressure emerge around that level. So at this juncture, you would agree with me of how crucial the $80 mark is going to be in guiding our trading decision for the week. And of course, you know how we use our key levels in this community. As long as price action remains above the key level, we look out for patterns and structures that support the idea of buying an asset. But if at any point in time price breaks down the key level, then we know that we are back within the seller's territory to incite a downtrend move. Now, with the information we have gathered here, we would like to scale down into the 4 hours time frame where I was able to identify a setup that will serve as a platform for trading opportunities for this week. Now, on the 4 hours time frame, it's quite a simple setup we have here. In fact, what I did on the 4 hours time frame was to take into consideration the historical data for the last 1 month, and you will see that throughout the month of October, despite the strong bearish momentum that brought price into that $80 zone, throughout the month of October, we saw how it became difficult for sellers to break through. Every attempt by the sellers to break through the structure was met with strong resistance from the buyers, as you will see here, and this went on till the last trading day of the month of October to emphasize the strength of the buyers around this area. And as a result of this observation, we labeled that zone around the $80 area as a demand zone, which interestingly lines up with our key level. And as long as price remains above or within a demand zone as robust as this, we of course want to be looking out for patterns and structures that support the idea of buying. And the only condition that will make us want to sell here is for price to take out all the buy positions here, retest of structure to incite a downtrend move. Now, in addition to that demand zone around the $80 area is this descending trend line that gripped this market in the since the second half of last month. You will see we have a descending trend line. In fact, I have a couple of them right here, which may be a barrier for buying opportunities, or we could see a breakout to incite an uptrend move. So this trend line here will be a gauge for trading activities today. If price breaks out, then we want to be holding on to a bullish bias. But if price continue to find selling pressure, and the inability of buyers to break out of this trend line may incite the breakdown of the $80 level to get ready to sell. So with the information we have gathered on both higher time frame, let's scale down into the lower time frame so that we can see how participants in this market have been reacting to the zone, this demand zone, since this new week began. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. Now, on the 1 hour time frame, remember our key level at the $80 mark. Price still remains above our key level, hereby still supporting the idea of buying that asset. However, during the first 6, 7, 8 hours of this new week, we saw this little bit of consolidation phase where price action was confined within the $81 level and the $80.65 area to emphasize the level of indecision at that point in time. And of course, you know how we do it in this community. Whenever price action falls into this kind of range, giving us a flat channel to work with, we have no other choice than to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, if you look at what happened here, at no point in time did we see price break down the support line, hereby negating any selling ideas. And considering the fact that price still remains above that our robust demand zone, we identified on the higher time frame, it makes quite a lot of sense to have a buy stop order above the $81 area to capitalize on the uptrend move. And for those of you who capitalize on that opportunity, well done and kudos to you for being on standby, as you will currently be running with about 70 pips in profit at this point in time. However, if you had missed out on this opportunity, it's okay. Let's exercise patience and wait for new structures to mature before jumping into any positions. Now, what are the structures we will be looking out for, and what are the things we want to see in this market that will give us the privilege of either adding more buy position or getting ready to sell? Now, from a technical standpoint, price has just broken out a very significant resistance level at the $81 area. And from a technical standpoint, whenever price breaks out of a key structure such as this, we expect at some point in time price will come back, retest the structure to incite an uptrend continuation. So if you had missed out on the breakout of the $81 level, then let's exercise patience and see if the market will do some retracement back into the structure to incite an uptrend move. Now, if price does not come back and it continues to find higher highs, then we have another level which I identified here at the $81.50 level to capitalize on an uptrend continuation. And in fact, I did had a buy stop order above that area, which appears to be triggered at this point. Now, there is one interesting thing about the $81.50 level, which I would like to share with you, and that is the fact that it shares a confluence with that descending trend line we spotted on the higher time frame. Now, we have a very beautiful confluence here. Now, if price will continue to the upside, then that means that this temporary descending trend line has been breached, hereby emphasizing the potentials of the buyers here. So I'm still looking forward to price remaining above the structure, and in fact a breakout retest will be all we need to be looking out for more opportunities in this market. And if price continues to climb new highs and break out of this other level at the what's it called now, $82.70. Hold on a second, let me look at this closely. So I think we have something right here around the $81.15 level. So you do want to be marking out these levels on your chart too as well. So we have the $81, sorry about this, $81.15 level, which will be welcoming more buy position if price goes on to break out of that structure. And interesting enough, that structure itself shares a confluence with that other descending trend line we have there. So let's see how the market will play out. We hold on to a bullish bias on the US All Spot as long as price remains above that $81 area. So like I said, let me do a recap of what I'm expecting for bullish expectations. We're already in a buy trade, and I said that for those of us who missed out on this buy position, we could either see price retrace back into the $81 level to join an uptrend move, or we could see price break out of this descendant trend line, retest of the $81.50 or trend line to incite an uptrend situation. So this is how we are going to be managing our expectations on bearish opportunity in this particular market. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the potential that sellers too can do something in this particular market. And what is it that we want to see on this chart that will make us change our bias from bullish to bearish? Well, personally, if you would ask me, from a long-term perspective, I would rather want to see price action take out all the buy zone within the $80 area. Remember, this level has been a strong demand zone throughout the month of October, as at no point in time in the month of October did we see sellers successfully break through this level. Now, if price will break through the $80 level anytime this week, then this might be a beautiful signal that we will be going on a massive sell. Now, based on this current structure, is it possible that we could actually sell before the breakdown of that $80 mark happens? Well, if we are going to be using the range that's kick-started this week, that is between the $81 level and the $80.65 area, where the $80.65 level is the support line of that range, well, a breakdown of the support line may make us start considering selling the US All Spot, but we will not be selling right away as we will need some confirmation to come in to give us confidence of joining that bearish move, and we might want to be seeing something like a retest of structure, price action finding lower lows and lower highs, then we can capitalize on the bearish move. And remember that as soon as price gets into the $80 area, you move your stop losses, secure the current sell position, and let's see if the market will find buy pressure again around the $80 area. Remember, this is a buyer's territory, or we are going to be seeing a breakdown of the $80 mark to give us a confidence of adding more sell position to our exiting trade. So let's see how the market will play out in the next 24 hours. I still hold on to a bullish bias, and we are looking at the potential of either a retest of the $81.50 or the $81 area to incite an uptrend continuation. So let's mark these levels out on our chart, as we will be needing them as a reference points to guide our independent trading decisions for today. If you have any questions whatsoever, or you need me to do some clarifications as regards to the current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we move on to the next asset on our watch list. So I can see a handful of comments actually. I see High Cry. Good morning to you. You're having difficulty in depositing. I would advise you to go to the front page of your app right now and click on the icon that has the headphone with a head on it. Click on it and it will take you to the customer support center, and I'm very sure that they will answer you and give you the right process to get through this hurdle. Okay. I see your comments. Skins, good morning to you. SG123307771. I see all your applauses. Good morning to you, and glad having you around. 7 Love, good morning. Totolin, how are you doing today? All right. So in the absence of no questions, I do want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset on my watch list for this week is the USTech100, and in fact I'm beginning to see some bullish traction gradually unfold on the chart, making me to have a buy position triggered at this point in time, but it's not yet cast in stone yet, as we still have a barrier around the 15,150, which happens to be the highest point price action got to last week. Now, before I go into the details of what led to my decision of buying at this juncture, let's quickly run through the higher time frame so that we can have an holistic perspective into what is really going on in this market. And in fact, on the higher time frame, nothing has really changed from this current structure. Remember, we've been deliberating on this for quite a while now, and most importantly, what we saw on the higher time frame is the fact that price action has been bullish since the beginning of this year. And to further emphasize the strength of the buyers here, remember that we connected a series of higher lows which gave us this ascending trend line, which we have been using to guide our buy positions throughout the course of the year. Now, something interesting happened a couple of weeks ago when we finally saw price break down the ascending trend line for the first time this year. Though it didn't come to us as surprise as we already had been noticing the series of lower highs here, which led into that structure. Now, from a technical standpoint, we do know that whenever price action breaks down a very important trend line, such as the one we have here, we expect that some point in time, price may likely come back into the structure that was broken or into the descending trend line there to incite a downtrend continuation. In fact, we were lucky enough, we were part of this bullish momentum as we rode all this distance of about 900 pips thereabouts into the current structure we have right now. Now, price action is at a crucial confluence where both the descending trend line and the ascending trend line is where price action is currently oscillating at the beginning of this week. Now, in addition to the structures we have here is my key level at the $15,300 mark. Well, as you will see here, since the month of June, this level had played a major role in determining the direction of price action. In fact, throughout the month of June, it was more of a selling niche, as you will see here, before price broke out of that structure in the month of July. We saw a little bit of breakdowns again happen, as you will see right here. You can see how this level has been determining the way price action will move. We saw a little bit of consolidation here before price broke down the structure in the month of September. And since the breakdown in the month of September, price had been trading below the 15,300, as you will see right here, and it appears price action is gradually approaching that level one more time. So the 15,300 level is going to be my key level for this week, as depending on the direction of price action around this area, if selling pressure persists below the 15,300, we might be in for a bearish momentum to the downside. And in fact, if price breaks out of the 15,300, we might be in for an uptrend continuation. Now, with the information we've gathered here on the daily time frame, if we scale down into the 4 hours time frame, there are a couple of levels here that we will be using to guide our decisions for this week. Now, that's the 15,300 up there, which happens to be the highest point on this current chart, as you will see right here. Then we have other couple of levels, like the psychological level around the $15,000 area, which was broken last week. And then we have the 15,150, which, as you will see, that since this new week has begun, the 15,150 has become a barrier for buyers here, as every time price gets into the zone, we saw how sellers come in to push price a little bit to the downside. So the 15,150 is an area we are going to be looking at today to see how the market will react to this for this week. Now, there's one more thing that I would like us to take into consideration, and that is the breakout of this descending trend lines you see here. Remember, prior to the beginning of this month, the USTech100 has been finding strong bearish momentum, where we saw a series of lower highs and lower lows, and not until the first day of this month we saw the breakout of the structure. And from a technical standpoint, whenever price action breaks out of a descending trend line like this, we do expect that some point in time price may still come back to retest the structure. We could see some profit taking activity, especially after buying at a very cheap price, let's say around the 14,200. And for those of us who bought around the 14,200, and right now price is around the 15,150, that's over $1,000 move. Some of us will want to be taking some profits off these positions, and this could likely reflect on the chart as a retracement. So we are not going to ignore the potential that sellers could bring price to retest this descending trend line in anticipation of an uptrend continuation. And in fact, if sellers come in, we are likely going to be seeing a minimum of 800 pips to catch here, if that is going to be the case. Now, with this being said here, let's scale down into the 1 hour time frame so that we can see how participants has been reacting to this 15,150 since this week began. So on the 1 hour time frame, we will begin to see things very clearly. Now let me zoom right into the current structure that reveals the nature of trading activities since this week has begun. Now right here on the 1 hour time frame, since the week began, we saw price consolidate initially, confined within the 15,125 and the 15,085 area to emphasize the level of indecision at that point. And you know how we do it in this community. Whenever price action falls into a range, giving us an inclination into the uncertainty in the market, we have no other choice than to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with the situation we have here and a rectangle pattern, I already have a buy position triggered after price did break out of the 15,125. But one thing about this buy position is that it is not yet cast in stone at this point, because we still have a barrier around the 15,150, and I shared this with you how the price had been playing around this area in the last couple of months. Now you can see what is going on right now. Buyers are still finding it difficult to break through that area, so the buy position I have right now is still very shaky. Now, besides the buy position here, there is a trend line which I think we can use to guide our trading decisions for this week. So if I connect the series of high and lows, I would like to give this a blue color instead, and let's bring back our candle chart so that we can align this trend line so that I can capture most of the pivot lows. So here we go. So we already have a trend line right now that we will be using to guide our decisions for today. Now, as long as price remains above this ascending trend line, we'll feel comfortable in this buy position and look out for more opportunities at the breakout of the 15,150 to incite an uptrend continuation. Now, please note that the breakout of the 15,150 could incite some retracement back into structure, which interestingly shares a confluence with that ascending trend line to incite the uptrend continuation. So with this in mind, you do want to be given enough breathing space for price action to breathe, just in case it does the retracement after the breakout of the 15,150. So this is how we are going to be managing bullish expectations for today. However, in as much as we're looking out for buying opportunity, you know how we do it in this community. We want to be as dynamic as possible so that we can be on standby for even when sellers come into play. Now, with the current situation in the market right now, how do we intend to capitalize on a bearish move? Well, first of all, considering the continued selling pressure around the 15,150, and if it continues today in such a way that buyers are finding it difficult to break through, leading to the breakdown of that ascending trend line, we might begin to get ready to start considering selling. Now, since we have a range that price action has been consolidating in since the beginning of the week, where the lowest point, which happens to be the support line, at the 15,085 area, well, we'll want to see price break down that 15,085 level to incite a sell-off. And in fact, a sell-off here will be as a result of profit-taking activities, like I showed you on the 4 hours time frame, that we had an impulsive bullish move that lasted throughout last week. We might likely be seeing majority in the markets taking some of the profits of their position, which could reflect in some selling pressure here. So I would like to see price drop below the 15,085 to start considering selling from a long-term perspective, but we can actually join a bearish move even before the breakdown happens. So if we are going to do that, we want to be using this ascending trend line as a yardstick. So if price does break down the ascending trend line, then we want to look out for confirmation such as price retesting the trend line or the 15,125 area, where continued selling pressure reveals that buyers are finding it difficult to climb back above the ascending trend line, giving us the privilege to join a bearish move. Then we can now have a sell stop order below the 15,085 area to capitalize and maximize that move all the way to the downside. So these are the conditions that will guide our selling opportunities today. So you can see how the ascending trend line is going to be playing a major role in helping us decide what our next course of action will be on this particular trade. So because of this, you do want to be marking out that level, that trend line, and the range between the 15,125 and the 15,085 area to help as a reference point to guide your independent trading decisions for today. So if you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the last asset on our watch list for today. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset we are going to be looking at today is the cable market, which is of course the GBPUSD, and in fact I do have a buy position running at this point in time. And before we go into the details here, I would like to emphasize the importance that we need to check the higher time frame so that we can have an holistic perspective into this market, and of course have a tangible reason why I actually took advantage of this buy position. Now, from a fundamental perspective, following a slight increase in the US Treasury bond yields as at this morning, we saw that across the major pairs that the US dollar was making efforts to recover from last week's lows. However, it is important to consider that the potential for a sustained uptrend trajectory of the US dollar could be limited due to expectations that the Federal Reserve will maintain interest rates at their current level during their next meeting in December. And of course, they've also been inciting the idea of a rate cut during the second quarter of next year. So all of these are not looking very pretty for the US dollar. So in that regard, I'm still of the opinion that the pound sterling will continue to rise from where we have been buying last week. In fact, last week trading session was a very tremendous week for us on the GBPUSD, as we were able to scoop in over 600 pips on the last trading day of the week. Remember, we've been looking out for buying opportunities since the beginning of last week, and it didn't come until the last trading day. So this is why patience is very, very important whenever we've spotted the direction where price action is likely going. So let's run through the higher time frame. Let's have a quick review of what is really going on in this particular market. So our first point of contact for the GBPUSD is the daily time frame here, where I have a very simple and interesting setup to guide our decisions for today. Now, looking at the structure on the daily time frame, you can see here that it's quite clear that price action has been bearish since it found the highest point at the 1.314. That was in the month of July. And as you will see that since price tested that zone in the last 4 to 5 months now, price action has nosedived to the downside and along the line found uniform lower highs, giving us this beautiful descending trend line to work with ahead of this week. Now, in addition to those trend lines, here is my key level, which is situated at the 1.21300 area. In fact, this level here had played a major role in determining the direction of price action since the month of March. As you will see, throughout the month of March stroke April, it has been a buying niche, and not until September we finally saw the breakdown of that key level. We saw rejection around this area, and during last week's Friday session, we saw price finally breaking back above the 1.231, coming back into what is usually known to be the buyer's territory. Now, there is one more thing here that makes this whole structure very intriguing and supporting the idea of buying this asset. Now, if we look at the impulsive move that brought price into the 1.2100 area, you will see here that despite the strong bearish momentum, it became difficult for sellers to break through that zone throughout the month of October. And as the inability of sellers to break through the structure in the month of October is quite a sign that buyers may likely be gaining some momentum, and in fact, in a matter of time, we're likely going to be seeing an impulsive move. So in that regard, I labeled this area a demand zone, and in fact, I was able to spot something that looks like a reversal pattern. And of course, you know how we do it in this community. Whenever we observe the potential of price action transitioning into a reversal pattern, the next thing we want to be doing is to mark out the neckline of that pattern. And coincidentally, the neckline shares a confluence with that key level at the 1.23100 area. So you can see how crucial this is. And in fact, we need a breakout of that neckline to validate the potency of that reversal pattern. And look at what we have here. Price just broke out the structure on Friday with an engulfing bullish candle, breaking out of the descending trend line, the temporary one here, which another sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And remember, price action is now gradually approaching the second descending trend line. And in fact, if a breakout of this trend line happens, this will further emphasize the strength of the buyers at this point in time. Now, with the situation we have now and the breakout of that neckline, what is going to be our plans? How do we intend to capitalize on the next move? Well, technically, we want to see price breakout, retest the neckline to incite an uptrend move. But now that we have a breakout, are we going to be having a retest anytime soon, or are we going to be seeing a situation where price will just break out of the trend line to incite new opportunities? Now, to help us have a foundation for today's trading session, for this week's trading session, I did identify a simple setup on the 4 hours time frame. Now, on the 4 hours time frame, what I did here was to take into consideration the nature of price action in the last 3 to 4 weeks. Now, if we do that correctly, you will see that we have this 1.2330 area, which has been a selling niche in this market for most of the part of the last part of October. It was more or less a selling niche as buyers found it difficult to break through that area, and not until on Friday we saw that breakout happen of this area. Now, price has taken out the supply zone, and currently price is trading above that supply area. Now, it is usually expected that when price breaks out of a key zone or structure like this, we want to be seeing a retest of structure to happen, which interestingly shares a confluence with this ascending trend line I was able to spot here. So if price will come back and retest that structure, we might be seeing another wave of bullish momentum happen here if buy pressure resumes, or probably a breakdown, if a sell-off if price breaks down and retests that structure. Now, our center of focus for today and for this week is right at this highest point here, as we want to see how participants have been reacting to the structure since the beginning of this week. Are we going to see price retrace back into the supply zone to incite an uptrend move, or are we going to just see price continues to find new highs using the 1.239 area, which was the highest point for last week's trading session, as a platform to find new buy potential? Now, to understand this and have a better perspective into what is going on, we will scale down into the 1 hour time frame. Now, on the 1 hour time frame, this is what I was able to come up with after trying to decipher what participants in this market have been doing since the beginning of this week. Now, it is quite clear that we have a range. Price has been confined within the 1.239 and the 1.23650, giving us something that looks like a flat channel, of course. And with the impulsive move that brought us to this point, we are likely going to be seeing an uptrend continuation pattern. So whenever we notice this kind of scenario, we either wait for the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. Now, with the way things are going right now, at no point in time did we see price break down the support line, so that negated the idea of even thinking of selling. Now we have a breakout of structure. This triggered my buy position, and for those of you who took advantage of this opportunity, this means that you're ready gradually tuning in with our analytical approach in this community. So what we are seeing right now, for those who bought, we have currently about 30 pips running in profit at this point in time, and I will be suggesting that those who bought the breakout of that 1.239 area should be moving their stop losses accordingly and secure this current buy position. Moving your stop loss to the entry point right now secures your position, and if there is any sudden pullback that happens, the worst case scenario, you will be taken out at break even. Now, for those of us who had missed out on this opportunity, let's remain patient. The market could still give us some opportunities to capitalize on this uptrend. Now, from a technical standpoint, when price breaks out of a structure like this, we still expect that price may come back, do a retest of the zone it broke out of to incite an uptrend move. So we still have a potential of price retracing back into structure, so you do want to be on standby to capitalize that move if that happens. However, if price does not break down, well, it's not all the time price does a retest of the structure it breaks. Sometimes it just continues to find new highs. Then we want to be looking out for new opportunities above. Now, the highest point price action has been for this week is around the 1.24250 zone. So I will just mark this level out too, as well, as we will be needing it to guide our decisions on adding more buy positions to our existing trade. So we have the 1.24250 level duly marked out. You do want to be marking out on your chart. A breakout retest will be welcoming more buy positions in this particular market. So let's be on standby to capitalize this move. And if you have any questions, this is my view here as regards buy the GBPUSD. I hold on to a bullish bias on this particular asset. Now, the only condition that will make me want to consider selling the GBPUSD is for price to break through the support line of that range, that is the 1.23650. Then we might be seeing a sell-off, maybe back into the 1.23 area, or the ascending trend line we spotted on the higher time frame, giving us a minimum of about 67 to 70 pips in profit and a maximum of about 100 pips to catch there before another uptrend move happens. So let's see what happens around this area. Our center of focus for today for buying opportunity is just right above the 1.239, and center of focus for selling opportunity is situated below the support line here at the 1.23650 area. So if you have any questions whatsoever, feel free to let me know in the comment section, and I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. I see your comment, Sarah09. Sorry about that. I would advise you to go to the contact center to lodge your complaints, and within minutes you will get attended to. So if you don't know how to navigate through that, just go to the front of your app, the home page of your app. At the top right hand corner, you will see the logo of a head with an headset. Just click on it and it will direct you to the contact center, and you will get your issues resolved appropriately. So I hope you find that easy to get. All right. Ezabdi Abdullah, good morning to you. Glad to have you around with us this morning. So in the absence of no questions, I want to assume that we are all on the same page here. And in that regard, let's move on to the last asset on our watch list for today. So the last asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. What an interesting situation we have here on this current market structure. The new week begins. The trading activity has begun on a slightly weaker note, as you will see selling pressure pushing price to the downside, and in fact sellers are finding a barrier around the 1982 level since in the last 4 to 5 hours now. The price action has now broken down that ascending trend line. That ascending trend line we identified last week. We are going to be looking at that in a moment. Well, for me personally, and looking at it from the fundamental perspective, this breakdown could be linked to the modest increase in the US Treasury bond, which has influenced market sentiments during the early hours of today. Nevertheless, it's crucial that to approach the situation with patience. It is necessary to validate this breakdown, as market participants are currently exercising caution before making any significant adjustment or placing a bet on this particular market. So it's important for us to wait for confirmations before we jump into any positions here today. Now, before we go into the details here, let's run through the daily time frame, where we want to look at what is going on from an holistic perspective. So the same structure we had last week still remains, as you will see right now. For those of you who were part of our live session last week, the structure still remains the same, as you will see here. Now, it is worthy to note that since the month of March, price action has been within a range precisely that's between the $2,010 area and the $1,810 area, to emphasize the level of indecision in the last 7 to 8 months now. However, something interesting happened through the second week of the month of October, when we saw price broke out of that descending trend line, which was supporting the bearish momentum since price found new high around the 2074 level in the month of May. Now, with the breakout of the descending trend line from technical standpoint, we do expect that price may come back to retest the structure, which interestingly lines up with that demand zone at the 1900 area. You can see how the 1900 area played a major role in pushing price to the upside, and this interestingly shares a confluence with that descending trend line. So we don't know if price will retrace back into the descending trend line in anticipation of an uptrend continuation, or are we likely going to be seeing price break out of the 2010 area to incite an uptrend continuation. Now, before I scale down into a lower time frame, I want to quickly emphasize how important the 2010 area is and the 1900 zone. Now for the 2010 area, you will see how this area had been a strong selling niche in the past before it was broken to find a new high, and as soon as price broke out to find new high, we saw it drop below the 2010 area in the month of May, and since then price has been trading below that structure. Now, despite the strong bullish momentum we saw at the beginning of this month, the inability of buyers to break through this area in the last couple of weeks is a red flag that sellers may still be very strong within the zone, and the possibility of profit-taking activities hereby increases. If this persists, we are likely going to be seeing how many pips move to the downside. That's about a minimum of 850 pips to move to the downside, and a maximum of about 1,000 pips to catch if price drops to the downside. So it is very crucial for us to understand what is really going on around below the 2010 area, that is around the 1,980, to see how we are going to be capitalizing on the next move. Will it be a bearish momentum for a retracement, or will it be a breakout of the 2010 area? Now, scaling down into the 4 hours time frame, we have a very interesting setup to work with. Now, on the 4 hours time frame, what I did here was to take into consideration the nature of price action throughout the month of October, and it's quite clear that price action has been on a strong bullish momentum throughout the month of October, giving us a couple of ascending trend lines to work with ahead of this week. Now, if we now zoom into the current structure, that is the nature of price action in the last 2 to 3 weeks, it's quite clear that price is consolidating, of course, between the 2010 and the 1,970 area. However, price still appears to be respecting that ascending trend line, and the fact that price is still above this robust demand zone at the 1,970 and the 1,955 area still makes me consider buying the XAUUSD. And in fact, if we take into consideration the geopolitical tensions in the Middle East right now, which increases the concerns that it could escalate to the whole region. This kind of situations usually increases the sentiment of placing capitals in safe haven assets such as the gold. And because of this, I'm still going to be leaning towards a bullish momentum in this particular market. However, if we take a closer look at what has been going on since the beginning of this new week, you will see that price appeared to have broken down the ascending trend line a little bit, as you will see here. Now, the question at this juncture is this breakdown a true one or a false one? If it's going to be a true one, then we want to be seeing something like a retest of structure. That is, buyers are finding it difficult to climb back above the ascending trend line. Then this will give us the privilege of joining a bearish momentum. And in fact, if price action goes on to take out the demand zone, then we want to be looking out for more selling opportunities. But if it turns out to be a false breakdown, price climbing back above the 1,990 will be a good opportunity to buy, and a further breakout of the 2010 will welcome more buying opportunities. Now, to have a better perspective into what is going on at this crucial juncture where price is around the ascending trend line and the 1,990, let's scale down into the 1 hour time frame to see what is going on there. Now, on the 1 hour time frame, we begin to see how the market participants have been trading since the beginning of this week. And in fact, for the first 4 to 5 hours of this week, price was confined within the $1,993 level and the $1,987.50 level. And of course, you know that whenever we have a range like this, we wait for either the breakout or the breakdown of the structure for an opportunity to trade. Now, interestingly, the support line of this range at the $1,987.50 level shares a confluence with that ascending trend line we spotted on the higher time frame. Now we saw the breakdown of the structure happen here, and instincts will tell us right now that we want to be getting ready to sell. As you all know, from a technical standpoint, we expect that after price breaks down a trend line and a key level like this, we expect some retest of structure to incite a downtrend continuation. However, the fact that price still remains above that robust demand zone we identified on the higher time frame around the 1970 and the 1955, we will not want to be jumping into a sell position just like that. And if we take it a step further to look at the character of price action in the last let's say in the last 9 to 10 hours now, you will see how the 1982, despite the strong bearish momentum that started this week, had become a barrier for sellers to break through that area. And if we take it a step further to look at the nature of the wick of these candles as soon as price tested the 1982, you will see that they are sharp rejections of this level and zone, giving us insight into the inability of sellers to settle into this current structure. And for me, this is a sign that buyers still have a say in this market, and it could turn out to be a false breakdown of that ascending trend line. So how do we intend to buy this asset, and how do we intend to sell if that is going to be the case? Well, like I said earlier, that we are looking forward to breakdown, retest of structure to incite a downtrend move. Now, if price continues the momentum back into this ascending trend line, I'm still going to be skeptical of buying. So I want to see something like this price coming back into the $1,987.50 area and that descending trend line, and I see that sellers are finding it difficult to drop below the descending trend line, then at that point I want to start considering buying. Then if that happens, I want to be buying above the 1990, buying above the 1993 to maximize the potential of that move. Now let's look at this together again. Now we have a descending trend line here which has been supporting bearish momentum since last week Friday, as you will see here. Now a breakout of this trend line may start giving us an idea that buyers are coming in, but we are not going to be joining unless a retest of structure or the 1987 happens. Then we want to be part of that uptrend move. So that is the only condition for me to consider buying. Now, if price action does not come back to retest like this, but instead continues to find new highs, then the breakout of the 1993 will have brought price back above the ascending trend line, that is back into the buyer's territory, after which we want to be looking out for buying opportunities to the upside. So this is what we are going to be looking at to buy the XAUUSD for today. Personally, I still think that buyers still have a say in this particular market. However, if the opposite happens and price continues to drop to the downside, I will prefer to consider selling only if price takes out the buy positions around the 1982, and this will give me a lot of confidence to start considering selling the XAUUSD. However, if we see signs that sellers are gradually gaining momentum, maybe something like lower highs and lower lows below this trend line, then we can start considering selling. But make sure that as soon as price gets into the 1982, you move your stop losses on the sell position, secure your positions, because buyers will still push price to the upside from that area. And if price now breaks down, then at this point we want to feel comfortable selling the XAUUSD. So it's a simple setup we have here on this chart right now. Let's ensure that we mark out those levels on our chart, mark out the trend lines, mark out the range, as we will be needing them to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions, after which we want to be rounding up for today's trading session. All right. So in the absence of no questions, I want to assume that we are all on the same page. I see your comment, Ranel. You're saying you need to verify your ID. If you don't know how to do that, please contact the customer support. They will duly advise you on how to go about that in no time. The contact support option is on the home page of this app you're using right now. There is an icon at the top right hand corner that indicates a head with a headset. Just click on it and it will direct you to the contact center. Okay. Ranel, try that and you'll be glad you did. So it's been a wonderful moment with you guys today. I really appreciate every single moment I shared with you today as we took on 4 major assets, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And in fact, we were able to identify simple trading setups using fundamental tools such as trend lines, key levels, and chart patterns to gain insight into the market, and of course use that information to strategically position ourselves ahead of today's trading session. For those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, I look forward to seeing more of you in the nearest future. And I encourage you to be part of the subsequent editions, as the more time you spend with us, the better you get to understand our analytical approach and eventually be able to make your own independent trading decisions using the information you gather here. So on this note, I want to wish us all the best of luck, and hoping to see you all same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.